Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. Kiso, Weingen, and Warfield. This is exercise 1426. Textbook authors are Don Kiso, Jerry Weingen, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights reserved for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Okay, so right over here for exercise 1426, we're basically getting rid of debt. So let's kind of chart this out. So Gottlieb owes Ceballos, former Laker star, $199,800. Okay, the debt is a 10-year, 11% note. Because Gottlieb is in financial trouble, Ceballos agrees to accept some land and cancel the entire debt. The property has a book value of $90,000 and a fair value of $140,000. Okay, so with Ceballos, there's really two things going on here. So we've got a note payable for Ceballos that's coming, assuming for Gottlieb. So for Gottlieb, we have a debit. We're going to have a debit over here of $199,800. Now, in terms of the land, right, we're going to take the land off of our books at basically at book value. The land at book value is $90,000. Now, as far as the rest of this goes, this is not an entire, the remaining balance is not a full gain on extinguishment of indebtedness or a debt restructuring. Rather, what's happening here is that I've got, remember when we're ever taking property off the books, we got to take it off at its book's value. So the gain on land disposal is going to be my fair market value of $140,000 less the book value or $50,000. So gain on land disposal is going to be $50,000. Now, the remainder of this is going to be for whatever I need to do to balance my equation. So this is going to be $59,800. This is essentially going to be gain on extinguishment of debt or debt restructuring. Gain on debt. I would say this is gain on extinguishment of debt. Same thing, but it's not really restructuring. You're essentially getting rid of it. It's canceling the entire debt. So this is to record, and this is going to be right over here. So whatever, 1x1 over here. So this is going to be record extinguishment of debt. Okay, so for Ceballos, okay, so Ceballos is receiving land, and that has a value of $140,000. But Ceballos has a note receivable for $199,800. Okay, and then over here, we're going to have a loss on debt extinguishment. Now, what the book is doing here is they're actually calling this an allowance for doubtful accounts. Okay, so the book is actually showing they're actually showing this as an adjustment to the allowance for doubtful accounts. But if you kind of think about this intuitively, if I'm debiting, whenever I deal with the allowance for doubtful accounts, right, I've got my beginning, right, ADA, credit balance. It's a contra asset account. It reduces the carrying value of our accounts receivable, notes receivable. So my beginning balance is over here. My ending balance is over here. So and what impacts the allowance for doubtful accounts? Well, when I write off an account receivable, that's going to show as a debit to the allowance for doubtful accounts, credit to AR. On the credit side, I have recovery of AR previously written off. And then lastly, what I would be also have over here too is my plug or my balancing is going to be the bad debt expense, right? So I'm going to credit the allowance for doubtful accounts, and then I would be debiting bad debt expense. So even though this looks kind of funky by debiting the allowance for doubtful accounts, I can assure you that ultimately it's going to be going to bad debt expense as a debit, and that's how the loss will be reflected. So this is to record debt extinguishment or loan settlement, record loss, okay. So that's how we would go through and handle this for exercise 1426. I want to thank Wiley again for allowing me to use their questions in my videos. Please don't forget to like and subscribe, and I look forward to seeing you on the next video. Have a great one.